I'm excited to ask Mish about the overall market, going to look into different areas. I know she's a good expert on agricultural commodities, so we'll definitely get into some of those questions. And of course, we're going to have to ask about the Modern Family, because if not, Joel would come after me, like literally. I would see him in a couple hours. But let's go ahead. Mish, let me know when you're ready. You can give me a thumbs up. And we're going to get into, of course, we'll first talk. I'm going to ask about where we're at in this bear market, right? What inning are we in? So it's very important to kind of take an overall outlook first. Let's go ahead and get Mish on today. She's ready, kind of ready. Just want to make sure that she's ready, guys.
I don't know if she can hear you.
What I've done?
All right, let's get her on.
Here I am. Okay.
Perfect. I got you. I was just giving you a second there. Let's go ahead. Let's bring you on here. Let's get the layout set up. And let's first talk about the overall market. What inning are we in? Are we in the later innings? Do you feel that we're on the back end of the bear market, or are we just kind of getting started?
Well, we're in an extremely pivotal area if you look at different time frames. Clearly, if you're looking at a daily time frame, you've already seen the writing on the wall with the S&P 500 and the NASDAQ making new lows after the June lows held for a couple of months. But if you look at the small caps, they actually have held the June lows. And until that breaks, you have to say that's a potential bottom. It doesn't really make much sense logically, but that's what we're seeing on the daily time frame. If you go to a monthly time frame, and we love to use this moving average called an 80-month moving average, which measures about a 6 to 7 year business cycle. What's so fascinating about that is that we've had a couple of times over the last 20 years where we blipped below. Obviously, 2008 would be one. But since then, we've really held that 80 monthly. Even in the pandemic, we may have broken it, but we didn't close out below it. So that is significant because that means we've been in this sort of uptrend in the market for the 6-7 years, and that is holding exact support in 3 of the key areas of the Modern Family. One, of course, would be the Russell 2000. 2 would be Granny Retail, XRT, which is really more of a conglomerate of both discretionary and e-commerce and just brick and mortar. And even some staples in there. And then the third one would be transportation, IYT, which of course is the whole side of the demand of the economy. So the numbers were very clear. 195 in IYT, 55 in XRT, and 162.50 in IWM. And we held. So here's how I'm looking at it. I'm trying to use the overall macro, which obviously has major headwinds. But I'm looking at, are we heading into a bigger recession? Are we heading into another leg down if those 3 areas break on that 6-7 year business cycle? I would say yes. However, we never know, right? We love to guess. We like to speculate. Obviously, the evidence points towards guilty. But you always have to have an open mind. And so if for some, whatever that reason is, we can't even fathom at this point what, but it would have probably something to do with the Fed or the dollar or some other type of situation that comes in with the government. If it holds, it's possible, not that we've seen a bottom, but at least we'll stop the bleed, at least with this seasonal cycle that everybody thinks is quite bullish because of statistics when we are in a midterm election. So that's kind of what I'm seeing at this point. It's been very brutal market because every time you go short, if you're not a very active trader, you can get caught in one of those big bear market rallies. Of course, if you get long, you get really, really upset when you wake up one day and it opens up higher and then continues to tank. So it's been tough.
Now, do you feel that the Fed is just being too aggressive here, and will they break something in their quest to get inflation down?
I think the Federal Reserve is being, the rate of change has been, in fact, I tweeted this, blinding. I think that's the best word to use. Yeah. And even I was a little surprised this morning when I saw that the yields have risen even further. But I look at it 2 ways. I think that, first of all, they were really super late in trying to control inflation. So let's start with that. But there's not much we can do about that at this point. To me, the bigger question is right now is, besides the incredible amount of destruction they're doing in terms of just liquidity to the market, can they actually really control the type of inflation that might be coming? And that is really more on the heels of, besides the fact that we have Mother Nature out of control in so many places, including here in the U.S., the Mississippi River is at historical lows in terms of water level. Of course, Pakistan is basically underwater by its coastline. Can it control those type of supply chain disruptions that would happen as a result? Can it control food prices going up? Can it control the bubbling, emerging geopolitical stress we have on top of what we already have with Russia and Ukraine? And it ultimately, can it control people? Because people are getting more and more restless and upset all over the world because of this blinding speed of change. So that in and of itself, if things get out of control, can actually be very inflationary. So, you know, when you ask me that question, it's a loaded question because there's so much other stuff happening in the background that could burst. And whatever the Fed does, they will not be in a good shape. They're just really probably in the worst shape that they've ever been, at least in the history that I've been studying, the Federal Reserve. Of course, we know they started years ago before but they really became prominent in monetary policy after the gold standard was removed. And since then, I've never seen anything like this.
Oh, Chris, you're muted. Dang
it.
Once.
Well, what do you think about Tesla? Where do you think we can find some, what do you think about their earnings? Where do you think we could find some support for them?
Well, one thing I heard you a little bit talking about Musk before I was jumbling here with my mic. Well, Musk seems to be his own worst enemy right now. I'm not surprised to see the stock come down. At some point, reality had a hit that China, obviously, their economy is not doing so great, that there's a tremendous amount of competition, that they've been impacted by supply chain, rising costs, et cetera. The Twitter sale, which is not going really well, he still has to raise more money. So getting here at this level is certainly no shock. But I see support maybe another $50 lower, maybe around the 150, 160 level. Do I think Tesla's going to go out of business? No. Do I think Musk is going to go away anytime soon? No. But, you know, this is really what happens is that when you get something that's so stupendous from an emotional and from a psychological and from a, just sort of a momentum, almost beam-like status, eventually, that taste of reality comes home. And when everything else is starting to collapse around you, it was just a matter of time that Tesla would follow in kind.
Right, I'm going to jump in here. Now let's talk about the consumer. It seems like, of course, we want to find out how the consumer is in this environment, holiday season coming up. The airlines weren't that bad of a report, and it seems like the eyeball test is not really showing us recession out when you're out and about. I just took a recent flight to New York City and it seems like everything was buzzing. Is the worst yet to come?
Well, I think we'll have pockets of that we haven't seen the worst yet. If things remain on this path, and which I always like to say at this point, I don't really want to be right about what I'm seeing, which is a potential panic where people really start to revolt, for lack of a better word, in ways that we don't want to see, and that, of course, will affect everything. But if we stay relatively calm, what's happening is there's a shift in how people are spending money. And traveling is something that seems to be obviously high on people's lists. They want to get away. So whatever money they have, whether it's for business because they haven't traveled to see their business compadres in different cities, or whether it's family they haven't seen, or friends, or just vacation, the cruise lines are doing well too. I agree with you, Mitch. I went to recently from Seattle back to Albuquerque, and I have never actually stood online as long as I did for security. The planes were absolutely packed. And then the shuttle service that you go from the airport to get your car, there were lines and lines of people that had come off planes. So I'm like, why? But, this is exactly, you just have to see that it's this new trend is maybe we're not going to go spend so much money in a store like we did on consumer discretionary spending. But if we have money, we want to get the hell out of Dodge. And I think that may not be sustainable for now. That's definitely the trend.
What do you think about the earnings season right now? It's pretty interesting, right? Everything's coming in line almost, but at the same time, stocks are getting hammered. What do you think this is looking like for the rest of the earnings season coming through?
Well, some things like Snap, if you saw what happened to that, I think it's down like 25% or something this morning. Yeah. Again, I think we're seeing a shift in just the current macro environment. So banks did better because obviously people can put money in the bank now and actually get some return. But on the other hand, people aren't borrowing money. Obviously, we can see with mortgages because the mortgage rates are so high and went up so fast. And then, of course, the earnings that we saw that were positive in Netflix is not a really great surprise because people are staying home more. So I think that what we're really is going to be the test, and the airlines, as we just talked about, people have been traveling from the summer and probably will continue to travel at least through the holidays. We'll see what happens once we get to the winter months. And of course, we'll see what happens with COVID. Some people predict that could still come back. Although I think most people are vaccinated and not too worried about it at this point. But getting back to my point, we haven't really seen what's going to happen yet with Apple and Google and NVIDIA, Microsoft. These are the big guns that are yet to report, and that's what I'm going to be very interested to see, whether they eke out good numbers going back, because it's a lagging indicator. It's really going to be more about the guidance going forward. And, I don't think that anything really is going to survive if the Fed continues to do what they're doing with the Fed funds rate and the yields, but we'll see. I mean, you never know. You never know. That's all I'm saying. But right now, I would not want to be a bull in anything at this point, except for maybe some commodities we can talk about.
Okay, yeah, let's do that. What do you think about the commodity sectors, right? You're talking about wheat, soybean, corn, coffee. There's so much to look at. What are you interested in?
Well, I am interested mainly in the foods and the softs at this point, because what's so interesting is what we've seen is when you get these really big downdraft days, nothing survives, right? Everything gets liquidated because people are raising money, margin calls, et cetera. But even with those big draft down days we've had, and energy, we have to put that in there too. We've seen corn and soybeans and wheat and sugar. Coffee more has gone down more because it's very weather related, and we're going into a Brazilian summer as we start to go into our winter. But I think that if you look at those downdrafts, they're still holding major support. And where we're looking at pre-pandemic levels for a lot of things, we're nowhere near pre-pandemic levels in the grains and in the softs and even in the energy market. And that to me is concerning because in the face of a rising dollar, in the face of higher yields, and in the face of what people think might be peak inflation, and certainly in certain areas that's true, those are holding up, which means if anything adds as a catalyst to those rallying from here, not only can they rally, but they can rally so fast, become actually parabolic for all of those reasons I mentioned, at the top of the show, which is all just the headwinds we've got going on geopolitically and with the climate.
It just seems to me like that's just more signs of concern for inflation, but I don't think we'll talk more about inflation. Let's talk about at least something positive. What do you see out there as opportunities right now, Mish?
Well, I'm looking at certain themes I'm very heavy in cash, by the way. We've been in the inverse ETFs in our quant models. So in TLTs, we're long TBT. We've been in QUID. We've been in SDS. And so we're sort of riding those. But in the discretionary account that I trade for our clients, we've been very, very heavy in cash. And so there's a reason why, because I'm looking at a couple of things here. Number one is, interestingly enough, some emerging markets, particularly commodity-related emerging markets, are outperforming. Latin America and Mexico. And then this is not a commodity producing country, but it's outperforming Greece for some reason. And I've always been interested in Greece because it seems like they've managed to survive already a horrible 10-year period that they went through when they were financially on the verge of collapse. In terms of actual sectors, I obviously am watching corn and wheat and sugar. And I'm also watching the precious metals, even though they've continued to go down in the face of all of this rate and dollar. That can easily flip if it becomes more of a panic situation. So I always have my eye there. And finally, anything that the government is backing directly, like Lockheed Martin, for example, more defense stocks, even Palantir, it's gone down, but it's holding. And anything, if we see a switch more to kind of reindustrialization in this country, as we continue to have more and more strained relationships with China, et cetera, if the government is backing it, and this is not to be political at all, because we know the government backs its own agenda that it sees for myriad of reasons. So there's the Republican, what they back, and then there's the Democrat, what they back. But whatever they're backing, that would be something interesting to me, whether it's government contracts, whether it's more in the EV space, whether it's more oil and gas drilling, if the administration gets more weighted to the Republican side. I'm going to kind of go with that. But really, you have to be so careful right now, Chris and Mitch. Risk is everything right now. And I don't mind sitting in cash and waiting to put that cash to use when I can, rather than what many hedge funds are experiencing right now, which is declines of over 20%, which means they have to make 20% just to break even. That's going to be sort of Herculean in this type of environment we have.
Well, Mish, it looks like we're going to have to, instead of don't fight the Fed, go with the government, because it seems like those picks seem to make sense here. I like the outlook, like always. Appreciate you coming on. Mish Snyder, like always, Managing Director at Market Gauge. Appreciate you coming on.
Thank you so much, guys. Have a good day.
Have a good day.